What in the world is happening today with mortgage interest rates? Hey, thanks for joining us today. I am so thankful that we have a longtime mortgage loan professional that specializes in explaining just that question to us. So, hey, it's Melissa Harmel with eXp Realty and Rhonda Johnson with Cornerstone Home Lending. Let's start
Easy for
over.
you to say.
Yeah. Cornerstone Home Lending is here to join us today, and she is going to talk to us about what in the world is happening with mortgage interest rates, because it's on everybody's tongue right now. So, hey, Rhonda, how are you doing?
Hey, Melissa. Well, it's been an interesting week. Let's just say that. Um, one of the questions that I get an awful lot of is from our first-time home buyers because they're asking what in the world is going on? How in the world are we ever going to be able to afford a home? And so I'd like to kind of address that a little bit because really they're kind of normalized interest rates. They're just not as low as they historically have been here recently.
Well, when you and I worked together at the same company before, I remember sitting in meetings with the whole mortgage and real estate lending team from a very high level and the person that was running secondary marketing. Every year, we had to present what we were doing, what were our predictions, how did we think we were going to do for the year. And that secondary marketing person every year said rates are going to go up, rates are going to go up, rates are going to go up, rates are going to go up. So it finally became, after a 5-year conversation of hearing that same thing. So maybe you need to get your facts different, buddy, because rates have really been low for a long time. And I agree with you. They are normalizing now.
Right, 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 right.
5-6% is an amazing opportunity to still buy a house.
Yeah,
So what's been, I mean, like, why has this all of a sudden this crazy ride just up, up, up? Why has that been happening?
right. And of course, yesterday, we heard the announcement that the Feds increased their Fed funds rate by 0.75%. That's the highest jump that they've ever had in the last 40 years. So, so it was a pretty aggressive move for them. Now, everybody needs to kind of keep in mind, though, Melissa, that the Fed funds rate is just the short-term interest rates. These are your credit cards, your lines of credit, car loans, things like that. This does not have a 0.75% adjustment on the long-term interest rates. What does affect the long-term interest rates is inflation. So when we loan out money for 30 years, and tomorrow our money is not worth as much as what we loaned it out for today, then we have to increase that interest rate to try to get the same rate of return on our money that we loan out for such a long time. So when the Feds increase the short-term interest rates, what they're really trying to do is bring inflation down. If they can bring inflation down, then we're going to actually see an improvement in our interest rates. So can you see the chart that I have on my
Yes,
desk?
I can see the chart. It talks about, it
It's
looks,
kind of
things going up
confusing.
and down.
Yeah, yeah. So it kind of looks like this little roller coaster ride going on.
Yes.
And each one of these, they call them candlesticks. So each one of these red and green marks represent the movement in the bond market where we go get our mortgage interest rates from for that full one day. And all day long, it's going up and down on this candlestick. So just like the stock market does every single day, there's an up and down motion. It's changing up and down all day long. So you can see here last week, the red means money came out of the bond market, and the green means money went into the bond market. When there's more money in the bond market, then we have more supply, so the rates can go on sale. When the supply diminishes, we have to charge more money because the demand is still here, but we don't have as much to loan out, right? So when we see red, that means the rates are going up because our supply has been diminished.
And so
So
when
you
I look at this chart, I see a lot of greens, little reds, and then all of a sudden now I see
it's
big reds, big greens,
like we fell off
but
the
not,
cliff here.
but not The greens are not as big as the reds.
Correct. And so you can see yesterday we were on this downward trajectory here of rates going up, 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 up because the bond market was compressing. Then yesterday, when the Feds made their 3/4 of a point announcement, then suddenly, boom, we saw some money going back into the bond market because the bonds liked the idea that the Feds are trying to reduce inflation.
Mhm.
So today, though, what happened overnight was that the rest of the world, so Europe, Switzerland, they all started making adjustments in their monetary policies as well, which some of them haven't done for 25, 30 years. And now they're starting to follow the US. And so it's kind of made this world monetary adjustments. And so the market was a little bit shaky about that this morning. What does that really mean? So it
Well,
opened
especially
up.
if they haven't done it in a long time, because again,
Exactly.
and I
Many
think the
years.
one thing, if nothing else, there is no normal. There is nothing about, we're not repeating some history. There's
No,
nothing that we don't, the mortgage industry and the real estate industry is not at any time been like this ever in the history of selling real estate, especially in the United States. We've
yep,
never had such a scarce inventory,
right,
large number of buyers, and especially those millennial buyers moving in to the
right,
market.
right,
And we've just never seen this. And
right.
so when people ask me all the time, how's the market? The market is brisk right now. If a property goes on the market that's high quality, in great shape, in a good location, in a good condition, we're still getting multiple showings, multiple offers.
Yep, yep,
Buyers are just, buyers and lenders need to be in communication.
yep,
That's what they
exactly,
need to be in
exactly,
every day.
right. So as we can see this morning, so this most recent green line right here is today. This is today's candlestick. So we started off lower. So we started off lower than we ended up yesterday. And we're trying to gain a little bit of ground back here today. So, but we're not as good as we ended yesterday, but we're not going down in red. Now, if we look at this over, this is just the most recent month. So if we look at this over a much longer time, you'll see this kind of roller coaster happening. And so
Wow.
you'll see that we were just kind of pretty steady here
We
for
had a pretty strong bond market.
almost 2 years. We just were bouncing right along here, no big shocks, no big changes. And then boom, and here we are today. And you can see this big fall off right here where we're at right now. And so we've
So
been on this.
again, investors are feeling a little unstable.
Mhm. So we were on this downward trajectory here since the beginning, since January of 2022.
Mhm.
So all of 2022, we've been seeing these rates go up, 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 up because this bond market has been going down, 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 down. So this is why it's so kind of shocking for everybody on, oh my gosh, what is happening in this world? Because we had this couple of years of just really nothing, just still doing good, hanging out, threes,
Mhm.
fours kind of rates. And now suddenly this is all big news. And so it's on everybody's mind. If we could go back even farther, you'd see it looks more a little bit like a roller coaster. And so there's ups and downs, ups and downs. But we've been very flat for a long time.
A
So,
long time.
right. And so this is what everybody's used to the past 2 years. But we're now in a different market.
Well, and some buyers, unfortunately, have been shopping for 6 months. And so
Yes.
today, shopping for them looks much different than shopping 6 months ago when
Right.
we had low inventory, low interest rates.
Right.
Now we have low inventory and higher interest rates. So I
Right.
think we're going to have to potentially have way different conversations with our sellers.
Yes, absolutely. So how do we help? How can we get this interest rate down for our buyers? How can we help them? Because right now what this increased interest rate environment means, it could be, 25 to 50 to $75,000 less buying power. Every
Yes.
1% rate increase is about $25,000 lower buying power. And so how do we try to help get back to our buying power? And one thing that a lot of people really don't understand is when they call up and say, "What's today's rate?" I can't tell you because there's so many different variables and so many different factors. It's a very personal rate quote for everybody. It's kind of like getting an insurance rate quote. You couldn't call up an insurance company and just say, what's the insurance rates today? They're going to look at your driving record. They're going to look at your credit score. They're going to
What
look
car
at
you're
the
buying,
car you're driving,
where
how
you
many miles.
live.
And so everybody gets a very personalized rate quote. And there's some things that we can do that might help depending on one, how you write your offer and structure it, and what kind of cash available you have to work with. So this is just a plain old 30-year fixed rate conventional loan right now, 5 minutes ago, that I priced out. This
So you
is
priced
showing,
it at what?
well,
5 points?
so the
Oh,
parameters that I put in here is like a $300,000 loan amount, a $400,000 purchase price, somebody with 780 credit scores, a little bit of money left over in the bank after closing. So there's 26 different fields I have to fill in order to come up with this quote. And that's why I can't tell you what
over the
today's rates
phone.
are. I can tell you for this person, here's today's rates. So
This
for
person with that house.
with that house in that location, that zip code, everything exactly. And so when I price this out, then we're going to start at the bottom here, and we're going to see that it's coming up with a 6.625% interest rate today.
So that's their principal and interest is
And so
1921.
this is the principal and interest payment, and this does not cost them any money to get this rate. And that's that money that you'll hear the term points is what
Right.
people might pay to buy a lower interest rate. So again, that's my rate with no extra money, but you could get a lower rate if you have some money to spend and you want to pay a little bit to buy a lower rate. So basically it's like this, Melissa. If you said, Rhonda, I need to borrow $300,000. I have a 780 credit score. I'm putting 100,000 down on this $400,000 purchase. What does that rate look like for me? And this is what I told you. Excuse me. Sorry, let me continue.
So again, audience, you can see that this is live. It doesn't just let you sit in there all day.
No, it's changing like
It's
that.
changing all the time. So she's got to get you on the phone and say, this is what I can get you today. And do you want to go with this?
Yeah.
So again, going back to what we saw in the last 2 years, we saw an increase in purchase price. We saw people paying way over list price. We saw buyers not asking for closing costs. So I think probably a conversation today that every listing agent needs to have, which I've actually been having this last week, is we're going to have to reconsider that. We're going to have to, if you want this much money for your house, we might have to contribute some closing costs for the buyer so that we could give them some money to pay. What did you call those discount points?
Discount points, correct.
Okay.
So today I would tell you, Melissa, you're going to pay us back for 30 years, 6.625%. And you said, well, Rhonda, I'd really like to get closer to 6%. I really don't like that rate. And so then as a lender, we have to say, well, how are you going to compensate us for the lower rate over 30 years? And you would say, I'll pay you some money up front for that lower rate. That's what discount points are. So then if we look at that 6% interest rate, then we see the principal and interest goes down to $17.99.
Which again is today's economy, saving $200 a month in a payment. Well, even $122 a month is a big deal. That's a tank of gas in your car.
Yeah, oh boy, oh boy. And so that's going to cost you $4,500 at closing to buy that lower rate for the entire life of the loan. But if we're going to save $122 a month by spending $4,500 at closing, it's going to take you about 36 months to recoup that. And then you're getting basically the 6% for no cost after that. So we want to always look at that. How long do you plan on living in your home? Are you going to live in it for more than 3 years? Because if you're planning on turning it over in a couple of years and doing something different, I would say, no, it's not, doesn't make sense to pay the points. But if you plan on this is going to be my next 5, 10, 15-year home, then absolutely it could be worth it. And so,
Well, because also too, you've been doing this 30 plus years.
mhm,
You already said interest rates have done this. So we buy the house today. I have to pay $1,921 in principal and interest, but there's no crystal ball that says rates could drop to 4.5%, 5%, 2%, 3%. We never saw them that low. Nobody ever predicted that they could drop again and you could refinance
right, exactly.
and just do a
Exactly.
rate and term refi.
Correct. So
Mhm.
this house I'm in right now, we bought in 1995, and we were at 7.25% for years, 10, 15 years. And then as those rates started going down, they went down just below 6%, and I could lock in at 5.875. And I said, I am so refinancing this house. I'll be below 6% and I'll be set for life. Well, 2 more refinances later, I was finally at the rate that I'm at now. But I thought 6% was just the greatest thing in the world. And so these are just more normalized interest rates
Mhm.
from where they were back in the mid 90s, actually. So these are more similar to where we were back then.
And at that point too, we had most buyers that were either going VA, first time home buyers with FHA, our buyers doing the conventional. A lot of those guys were putting 20% down. So they had a
Right.
little wiggle room. They
Right.
didn't feel, they put the 20% down and felt good about that.
So
And
another strategy that sometimes we can use, Melissa, this is going a little bit deep for today, but sometimes if you do have that 20% to put down, then what we might do is do maybe 10% down.
Mhm.
And we use that other 10%, one, to maybe pay some points to reduce the rate, and two, pay a one-time single premium mortgage insurance so
and
that
you
you
want
don't have that mortgage insurance.
that.
But
Mhm.
between them, it costs less than 10%, and your payment is lower than if you put the full 20% down. And so, again, we'll strategize that and do that mortgage planning with you, depending on everybody's different situation, and see what's the best financial plan to use with that little bit of pot of money that we have to work with, and how do we make that stretch to be most
And
beneficial for you.
sometimes sellers can help contribute to that little pot of money.
Right. And so sometimes if a seller said, I'm not getting enough activity on the home, maybe I'll drop the price $10,000. Well, maybe another strategy would be if you dropped that price $10,000 at this interest rate, somebody would save about $50 a month on the payment.
Great.
But look, if you paid 1.5 discount points and only spent $4,500,
Their payment's
that's
only
saved
six.
$122 a month.
Mm.
So the seller
So
only loses
again, yes,
$5,000 and the buyer gets a $122 benefit. And so it's a win-win for both sides. And so we
right.
want to, as a listing agent, that's where you shine with talking about some of these different strategies because you understand how this works. And so you can save your sellers some money and still provide a really great benefit to the buyers.
Exactly, because the market has slowed down a little bit with buyer excitement. I think that what I'm finding is that not all buyers have had an opportunity to talk to somebody like you. And we have a lot of buyers agents in the industry right now that have never sold real estate when rates were above 4%.
Right.
So they're thinking the sky is falling when logically here, this makes this very simple. Just negotiate some closing costs on the buyer's behalf paid for by the seller so that we can help accommodate a better payment because we were a little spoiled with our payments. When
Exactly.
rates are at 2.875, 3%, money was a house, the same $300,000 house, you're probably paying $1,200 a month. So how
Exactly.
do we help keep that payment down? Because again, that's typically what buyers are all about is how much money do I need to get into this house and how much is my monthly payment going to be? Because again, that payment is why I think if you've been out there shopping right now and you've seen properties come back on the market, unfortunately, a lot of that was because buyers unfortunately weren't working with a person like Rhonda Johnson. And when they found their house, they went under contract, The loan officer had not been in contact with the buyer. The buyer and the buyer's agent had not been connecting with the lender. They go out, they take their old pre-qual letter, write an offer. The lender sends over the loan estimate with the new numbers, and their debt to income ratio doesn't work anymore because I can't afford $2,000 a month, Rhonda. You told me I could spend $1,600. What happened?
Yes.
So again, instead of running around like a chicken with your head cut off, having those logical conversations with these sellers makes more sense, and explaining to them that, well, can you maybe just contribute $4,500? And then it would get them back to that $1,700, $1,800 a month. And so I think that that's the art of the negotiation. And definitely those of you watching, you need a mortgage planning specialist. You have to be talking to somebody like that. If your lender has not reached out to you in months, you are most likely still not pre-qualified.
Oh, no, absolutely not. I've been, well, I think you and I talked about this
Yes.
a couple of months ago, that I was bumping up the rates to like 6.5% for the pre-qual process. And I think it a little bit offended some folks because they thought, no, rates will never go there. But look, here we are.
Right. Well, I called a buyer, a lender yesterday on an offer that we received and said, so, because normally, for those of you that don't know, you get under contract. Yay, we found the perfect house. Then you go through the home inspection period. Yay, repairs get negotiated. Then you and the lender usually will lock in a rate a lot of times. So again, that's a week. That's 2 weeks sometimes. That's a long time.
Yes.
So you are not locked in. And so a lot of things can change in that 10 to 12 day time period.
Absolutely.
So,
so another clue for you, especially as a listing agent, would be the pre-qual letters usually have an interest rate put on them. So if you're still seeing 5s on the interest rates, really good red flag to kind of maybe question their qualifications.
Well, and I called the lender yesterday and said, so would the buyer be able to still qualify for this house if rates were at 7.5%? That's exactly what I said. He thought, what are you talking about? I said, buddy, let's just be honest with each other. I just need to protect my seller because we're not going to take this offer if this buyer is scraping everything together, because nobody has the crystal ball to control what the feds are going to do with interest rates.
Right.
So,
right. And I think you were telling me something about some of the buyers that you talked to, this whole generation.
Well, so what's interesting is the younger buyers, I think the biggest buying power we're seeing right now is from the millennial buyer. And so we have to take that person that's a millennial and we have to go back and look at the last 10 years. What have they been exposed to? And they haven't been exposed to 6, 7, 8% interest rates. Their parents were exposed to that. Their grandparents, they saw way worse.
For sure.
But they're just not exposed to it. So I think instead of telling them to run for the hills, again, working with a mortgage planning specialist and saying, okay, what is your monthly outgo right now for your living expenses? Well, then let's go shop in that price point where you could have the same monthly outgo, own a property, and save money on your taxes every year, because that's still available to us. So the benefits of home ownership is still high. We just need to be able to explain it to the millennial, and they're not going to get their parents' house with their first purchase. And I think that was kind of starting to happen a little bit there for about 6 to 8 months. They were able to buy this big butt house they really didn't need because it was so cheap in terms of a payment. It wasn't cheap in the price. It was just cheap in the payment. So now they just have to really think about that. And like you've always said, most people, the first time buyer doesn't buy that's why they're called first time buyers. They don't buy their end all be all home.
Right. I think the statistics say you're going to do between 7 and 11 real estate transactions in your life. And I've been in this house for 27 years. And I thought, oh, I so don't fit into those statistics. But when I thought back at it between 1980 and 1995, and looked at all the different real estate transactions I did before I got here, and this isn't our last one. This one will go away and we'll be downsizing from this house. But yeah, I'm like, okay, I'm counting them as like, oh my gosh, I fit right there in the statistics. So, they are what they are. And this house that you buy right now as a first-time home buyer is definitely a stepping stone into some other financial plan, whether you keep it as a rental or sell it and move on into something different.
Well, and that's the only thing I can really say to the viewers is if you haven't had an opportunity to talk to Rhonda, you're considering buying, whether you own right now and are thinking about moving, because people move. Real estate has always stayed steady. We've seen drops in the past for weird reasons, from way overinflated pricing
Yeah.
to bad lending practices, which we don't have anymore. And so you need to talk to somebody like Rhonda to figure out, what does your financial plan look like? And does this make sense?
Right.
Because we put our lives on hold for over a year because we were told we couldn't go out and do anything.
Right.
So we still are living every day. And this is not bad.
Right. No,
And if
no,
you're gonna
this
have
is
the
more
seller
normal.
contribute that $4,500, it's not bad.
Right. And again, people will ask all the time too, am I buying at the peak of the market? Is this a bad move? But the thing is that when you look again over history, then you're going to see the pricing of real estate kind of go up and go down, right? Go up and go down. I've been in here for 27 years. Had we had some cycles in 27 years? Yeah.
Yeah.
But when you look at it, it's like a roller coaster, but it's going up the side of the mountain. So each peak is higher than the last peak. And so you end up with yeah, you have some downward, write it out, take some time, breathe easy. You are good with the payments. If it was worth $400,000, the payments didn't change. If this year it's worth $300,000, because at some point in the future, it's going to be worth $500,000. And so just ride the waves. Don't worry about it. Keep making your payments. These are normal rates. They're just different than what we've seen in our most recent memory history.
Well, 10 years of low interest rates.
Right.
And so again, yes. So I appreciate it, Rhonda. If you guys have any questions, please put them in the comments. You can reach out to us. At the end of this video is slides with our contact information. We are real people. We actually do answer our phones. We do respond to emails. And again, questions that you feel like you're just not getting answered by somebody else, reach out to Rhonda and just say, hey, I need to hire you as my loan professional, because I need help with making sure that I'm doing the right thing with my money. Because again, she'll show you what makes sense and what doesn't make sense. Absolutely. So follow me at Melissa Realtor on all social media sites. And again, please like, subscribe to our YouTube channel. We do shows every week. We don't know what our topic is next week because we are in a little bit of a shifting market. And so we thought this week was good to just really bring it to your awareness. If you're a buyer or a seller, you and your agents need to be talking about how do you help buyers get their payments lower so they can afford to purchase your property.
Absolutely.
So we'll see you next week, Rhonda.
All right. See you next week.
Okay, bye.
Bye.